Welcome to the Salty Investors episode number 32. It is Friday, May, what is it?
19th. Yep.
May the 19th, 2023. How are you today, Tim?
Yeah, pretty good. Yourself?
Yeah, beautiful autumn day. Got the hoodie on.
Yep.
We haven't color coordinated again. We'll have to sort that out next week. Let's get straight to the salt. What's your salt for this week?
I've been told the government's going to solve the housing prices by printing, going to build a whole heap of homes. And I thought, oh, well, I have a quick look back in history and see what other projects that they started. And they did this thing called Inland Rail in 2017. Turnbull and his mates, and Barnaby, said, oh, we'll do this Inland Rail thing. It's only going to cost, $8.5 billion. And we fast forward a few years and nothing's really happened. And now it's blowing out to $31 billion. And the government department that was supposed to be running it, or the corporation that was running it, was found to be incompetent. Basically, they haven't had a CEO for 18 months, and the people running it didn't know how to build rail. All they knew was, how to maintain it. And I'm thinking, won't this be the same thing when they go to build houses? Like, will we get a different result? What do you think?
Same thing as when we went to build, or when we are in the process of building Snowy 2.0. How's that working out? I think the price tag is tripled or quadrupled, and they've extended the time frame by 2 years or something. It's just a typical government project. Yeah. I mean, I have a strange take on this, which is that if you're going to do social housing, okay, go all the way. Don't do this pretend fund where you put money in and you don't actually build houses, you just put it away for later on. Go full Singapore. Do a national house, have a proper national housing policy. I mean, they've got I think a home ownership rate of 80% in the country, something like that.
Yep.
So it works to get people owning homes. Whether it's cost effective, I have no idea, but it's tinkering around the edges. Now they're flirting with saying, I mean, this is not a new idea. You can only have negative gearing on one property.
Yep.
Which, of course, that's not going to be too popular with politicians since they all own several.
Yeah.
But I don't know. It's kind of. I'm sort of making an argument that the Greens would make, which is that, like, if you're going to do something, just do it. If you're going to do a government project, just go all in. Do it. Jump all in, and feet first instead of this dabbling around. Because Labor's got to tiptoe this line with the fact that they know that half the country's sort of at least fiscally conservative, if not culturally conservative, and that they generally don't like that much government interference. But you'll get some piecemeal, bullshitty, small scale thing that won't actually do anything. And probably idiots will be appointed to be in charge of it that have no idea what they're doing.
Yeah. I think, we tried everything else, well, besides the free market, which is the one that probably would actually fix it. But, we're not allowed to do that. So, why not try a heap of socialism?
I'm gonna stand up for socialism here. So I found out recently that in 2018, after the Commonwealth Games, was it 2018? In Brisbane?
I think so.
Yeah. So there was they built an athletes village and they had all these apartments ready to go. And of course, the owners of those apartments held them back for 2 years because they didn't want to flood the market with apartments and get a lower price for them, which is, that's perfectly within their rights to do. But, just saying free market will solve it. That's a free market. They got to do what they wanted. They held back, because of course they did, because they want to maximize what they get. They maximize their returns. So, sometimes the free market and what would constitute or result in lower housing prices and more supply don't actually meet, because incentives are different for different parties. Now, that system which is not great, is probably still better than whatever the fucking government's going to do. But
So what are you salty about?
This might even be reverse salt. I mean, I am salty about the Indigenous voice to Parliament, because it's such a. I just think it's one of the worst argued propositions I've ever seen. But the reverse salt is that the yes vote has now fallen to 53%, at one point being around 60%, I think. And remember that you need a majority of the population in a majority of states for it to pass. I think Queensland it's still in the no vote is actually more, but that's all right if you only have one state.
Yep.
But it was at 60% at one point. And I just wonder if it has anything to do with people not liking being lectured to by institutions like more recently the AFL and the Australian Rugby Union. And I don't know why that's supposed to work. It's kind of like Hillary Clinton in 2016 went out and she got a bunch of celebrities to appear on stage with her. And I don't know why that works, because if I see it, I'm immediately suspicious when I see a celebrity or some institution back the latest progressive cause. It just makes me more skeptical. But maybe that appeals to the conformist mindset of the people who want to be on the right side of history. They don't actually, it's not about weighing the arguments. It's just about conforming to the latest woke edict. Anyway,
Yep.
What do you think?
Oh, like when I see celebrities, I'm like, why do you get a say? Like just because you dance around and lie on TV, that you're acting and stuff, that you suddenly get a say on social, political issues more than the average person. I just can't understand it. Why, just because you're famous doesn't mean you got half a brain at all. Like just. Yeah.
Well, to me, it speaks to a sort of, it's the elitist contempt. Well, but Leonardo DiCaprio's he's rallying against climate change. Surely, you must agree with Leonardo. He's popular and a movie star and rich.
Yeah.
I don't understand. Like, you either know what you're talking about or you don't. And being a celebrity doesn't give you any special insight. And in fact, it probably, if anything, you should make you think these people live in a rarefied air, way away from the daily sort of concerns of most people who are just trying to make rent, pay the bills, pay the mortgage, whatever.
Yeah.
I don't mind that they get a say. But I just look at them and go, who cares what you think? Like what's the strength of your argument? Frankly.
I don't know, just a different world, I suppose. But we'll have to see if those people sort of survive. If we get a bit of a crash here, I don't think people will be looking to celebrities to solve their problems. What's your solution because you've been in a few movies? I don't think that's a wise a wise person to be getting advice from. But I don't know.
Yeah. So, anyway, moving on. I've stayed away from sort of economic data this week. Just wanted to have a look at more stock market related stuff. Yeah. Just I thought this was an interesting chart from B of A, which is that Russell 2000 earnings, and this is true of stock prices as well, lead the rest of the market, and they're I think this is what trailing 12-month EPS has already turned down quite a bit. Of course, a lot of Russell 2000 companies don't even make any money, right? Quite a few. So I think the S&P more broadly will likely, it's going to come down. We've seen estimates come down, but they're still not down to that level that we sort of saying, which is 200 or below. I think they're still around 215, 220 at this point, something like that. And they kind of are anticipating year over year resurgence in growth for the next couple of quarters in the US. So, I'm taking the under on that one.
Yeah, well, you're seeing a heap of companies just fly away, like Microsoft, 30% up, Amazon, 35 or something. So, that growth story, is really taken hold a little bit here, but I haven't seen the earnings compression at all happen. That leg hasn't happened. Like, it just nothing. Everyone's looking through, and it hasn't been that bad at all. So,
yeah. Well, the thing about that is we talked about market breadth. Was it last week or the week before? And I thought this was interesting. With that, you get your strongest bull markets when there's broad participation across sectors, industry, and just that the majority of stocks are above their 200-day moving average and trending up. I thought this was interesting because this is from this is for this year. So from December 30th, 2022, up until I think what's the date on that? It's about mid-May.
Yep.
Yeah. So the S&P 500, the S&P 500 is up about 7% for the year. So that sounds pretty good. The S&P 400, which takes out the top 100, is actually flat or slightly down. So the entire market is up based on the top 100, which is up 11%. So that's a thin market.
Yep.
That's a pretty thin market. Now, it doesn't mean it will stay that way. It can reverse, and and the rest of them can follow. And they're just the slow pokes that end up turning around. But it's not indicative of a strong market. So it just looks a little fragile. So you can see the Russell 2000 is down about 1.5% for the year. That's the R2K.
What's the EW
R2K
one?
line.
What's the EW?
S&P EW. I actually don't know.
Okay.
You don't know.
Yeah.
S&P EW, but it pretty much tracks that S&P.
Yeah, 400.
Yeah. Yeah. Micro caps, of course. Well, micro caps always.
So the Russell's keeping really close to the 400 here. Like actually.
Yeah.
So.
Yeah. Not much worse.
Yeah. That's.
But Yeah, the point is, it's just that the market is being held up by whatever that is, 20% of the S&P 500 is responsible for basically all of the gains. Yeah. Which is generally not indicative of a strong bull market.
Yeah, and that affects me a bit as well because I feel like I'm brilliant at the moment because of my portfolio. So it's got large caps in it, and two of them are gone up 30%. This year, and I'm thinking, how do I get involved in the? I should be picking low and smaller cap or even micro cap. It's still hated terribly, isn't it? Like no one really likes. But I can't pick them as well. That's the problem. Like, I can't pick those moats and the, competitive advantages as well in the micro caps. So, just don't know if I'm going to get hammered if I actually go into, and it reverses on me.
Well, it is harder. I mean, it's just harder, isn't it? I mean, because what you're not actually assessing whether this has a moat or not. You're assessing, will it have a moat in the future?
Yes.
Can you foresee? Yeah.
Yeah.
Whereas if you're looking at FICO and you say, there's a moat.
Yeah. This is the problem I've got. I keep seeing these charts and I'm thinking, far out. This has got to, reverse the trend at some stage here, at least a little bit. Like, there's no way that this can just keep continuing. But yeah, have to wait and see, I guess.
Yep. So that'll do it for my contribution. So we're going to have a look at Graco.
Yeah, Graco. So basically, this is a little company that basically looks after fluids, pumping fluids, especially corrosive or hard like tar or paint. They're really good at investing in, new projects and new equipment. So what Terry Smith from Fundsmith just started to buy into it. And you might remember Stephen Arnold from Aris. He just non-stop talking about it. Every time he gets a chance. He's sort of like Charlie Munger and Costco, this guy. He just loves this company. And I'm thinking, maybe Terry Smith's watching him a little bit here and he's giving him a bit of a plug. I don't know. But and what Stephen goes on about is basically in the GFC, they didn't cut any workforce. They didn't cut any R&D. And they're that strong that they just walked through it. And so they're the companies that when it gets hit hard. And then on the other side, obviously when everyone else is cutting, they've spent a whole heap in R&D and kept all their workforce intact. They just fly out of the recession, which is what you want. The people who can jump out the fastest sort of grab that market share and the earnings. Everyone's like jumps on board and, Yeah. So you look at their, you know, the shares outstanding, they're buying down shares, price to free cash flow isn't too crazy, but it's more of an industrial type. They
Mm.
sell paint sprayers. So if you're a commercial painter, you'd want something that's decent, not going to waste paint, you know, sturdy.
Yep.
So, yeah, price to free cash
Um,
flow. Yeah.
So they say here, office sprayers that apply texture to walls, ceilings, roofs, markings on roads. You would think that that's fairly resilient, isn't it? Things like roads, markings on roads. I mean, that just has to be done and will be done during recessions or not, right? I mean, I expect they've got government contracts there, or maybe I'm wrong.
Yeah, partly. That's sort of government funded. Like, and you got the housing industry as well, which is like,
Mm.
even in America, it's getting hammered a bit now, but that's still underweight houses being built.
Yeah.
So I never got into it because Terry Smith says things like, if it's steel, it rusts, and it's things you don't
Mhm.
want to invest in because people will just delay their purchase. But here he is investing in steel, so I'm a little bit, what are you doing, Terry? But obviously you look at the return on invested capital here, and you're just seeing 20s and 30s, just solid,
Yep.
for
Yep.
years, and that's what he loves. He just loves the consistency. Just the gross margin and the operating margin's bloody good.
That's
But
pretty good, nearly 30%.
yeah, for
Yeah.
somebody who makes spray equipment, and the other thing I had is like, oh, won't the Chinese sort of freaking eat your lunch here? Like, like,
Mm.
but if you're handing over the professional side, they want really high quality stuff that's not going to break down because your labor costs are just horrendous.
Yeah.
And you want something that's going to put paint down, correctly, not waste any product and keep your cost of goods down. So yeah, got a dividend payout ratio, 32%. That's not too crazy. So that
Yeah.
return on invested capital, that's going to come down a little bit. You're going to be in the high teens there when you take that into account, but
Yep.
interest coverage 100. Yeah, it's solid, but boy, it's a bit of a boomers type stock. Like you,
Yeah.
like you're not, it's going to be a slow mover like this. If we get if we get a bit of a hard landing here, I don't know if this is Terry saying, oh, he's a bit more on the soft landing type camp because this
Mm.
obviously is just going to get smashed if we get a recession. So, I'm not sure, but I've got the cash flow and the balance sheet on the next slide.
Yep.
You see the free cash flows like slow down a whole heap.
Why is that? Do you know?
I'm not sure exactly, but they're investing in things like gas. So these guys are smart. So I went back to 2014, 15, and they're going,
Yep.
oh look, everyone hates gas. Maybe we'll build some specialized equipment to, look up. Imagine what that's looking like now. That segment,
Yeah. Yeah.
you could charge what the hell you like. No one wants to be in that area, do they? So yeah, it's got some little. The cash flow is a little bit lumpy. But COVID, yeah, I can see why coming out of COVID there, it sort of boomed a bit. They got a whole heap of household stuff as well to
Yeah.
help DIYers and things like that. So
These guys don't. I mean, if they're selling to, your average sort of painter, and they don't have stores, do they?
no, they've got wholesalers
Yeah.
that just goes into stores, but yeah, they just
Yeah.
reinvest. Like they've got so many engineers on, they just pick so many little segments, like little niche markets, where you can charge what you like. And they've got great
Yep.
engineers that go in and just buy these. So you're going to see the cash flow get smashed every now and then when they go to take on another segment, but
Yeah.
they just seem to be able to keep doing it. And it's just amazing for an American company that manufactures things. Like you just don't see that now. This is like 80s,
Yeah.
90s type stuff. Like
Yeah.
they all got obliterated. So there's a couple of them still holding out there, but you can see like they got no debt. It's
Yeah.
negative. They're making cash flow, so I just think they're going to get hammered. I just think because I'm in the hard landing camp, I'm like, oh, I'm not touching this thing at all. Like,
So again, this is a wait for the apocalypse and then scoop it up at a discount.
yeah. So for me, it'd have to be because I don't think there's that much of a moat. What do you think of the moat? What do you think? It's pretty Do you think China's ever going to come in here and take some of their lunch? You know, like they
Well,
got.
that's the, because it like you say, it's like America doesn't do that much of this stuff anymore. Why do they do this? Do they have intellectual property that others don't have? Is it just that they're an incumbent and their fingers in so many pies it's hard to,
Yeah,
get in? But you would think it's one of those areas where outsourcing to third world has got to be cheaper, wouldn't you?
yeah,
But I don't know. I don't know. I guess I'd have to say I don't know. I just don't know enough about it. The industry.
yeah.
Have you read any research on this? Anybody's research notes or anything?
No one does a write
No
up.
one.
Yeah, I think Steven's written a little bit somewhere, but he obviously knows it very well. His analysts have done trips there, and they really love it.
Well, I guess it's good. I guess it's good if it's not covered by analysts. That's a positive in its favor, that people just ignore it, because it's like you say, it's industrial. They spend a lot of money on R&D and actually manufacturing real things. Remember that? Remember that?
CapEx, holy hell! Like,
they actually build stuff and make stuff.
Yeah. So, and they seem to be good at acquiring things. Like they acquire these little companies, all around the world. Like, just make these little pumps that are just made out of certain types of plastic that are resistant to chemicals and all this. The management is actually good at acquiring these little and bundling them all together and and putting them in house and stuff. So I don't see that too often. You normally see them acquirers. You've talked about this before. Like, no one's
diversifiers.
Really... yeah. So these guys seem to do a pretty good job, and you can see here their book price per share. I know this is an old metric, but it's 3x from 2016. So I just don't know how far it can continue. Like, when I look at 10 years, I think far out.
Well, it just depends how I mean, the way you can revalue your assets and intellectual property, and then one day you do like a Procter and Gamble, go, oh, we're going to write down the value of Gillette by $8 billion.
Your book value has hammering, but I know. So I just, China reminds me of Japan. Just they start building all the junk and then stealing all the intellectual property, or making it better themselves, and then eventually these higher tier industries eventually get taken. And this is, I just can't see it. 5 to 10 years out, like, will the Chinese not take this one as well? But
well, I mean, why haven't they to date? That's worth asking.
Yeah.
Why haven't they to date?
I think it's the quality. Like, they just stick to quality, and they don't try and. You see all the Western brands, they just keep the brand and then get it manufactured overseas and decrease the quality. And everyone goes, "Oh, well, why do I buy you guys? I can buy."
Yeah.
So, I don't know, but will they continue? So that's all.
Well,
I thought, since Terry's bought in, and Stephen keeps freaking plugging on about it, so I thought I should have a bit more of a deeper look.
Yeah. Well, always interesting to track what Terry Smith's doing. And what I like about Terry is if he screws up and makes a mistake, he'll tell you. He won't hide from it. He'll come out and say, "Yeah, that was a bad one." But he must. Yeah. But like you said, it's got the metrics that he likes. Your return on invested capital consistently, 20, 25%.
Yep.
Over time. Yeah, that's pretty. I mean, that's very consistent, isn't it? I don't know what happened in 2016 there, where it's 4.5, but 26, 34, 30, 25, 27, 25, 25.
I don't
pretty
think
good.
It's nice and steady for him. I think that's what he likes, but I just don't know what he's doing. So he bought PNG as well, so I want to do that one as well. So hopefully,
he did.
Up that a little bit. So that's something that I like and understand a little bit better. Like, I think that'll So
it's a solid one, but again, it's like that. Like, but what it's what do you pay for it? What do you pay for it to get a superior return? Because people, like last year, there was a flight into those types of stocks. It's not like they're cheap.
No. Yep. They're staples.
Yep.
But everyone says, oh, staples hold them through a recession. They always do well. So I think everyone's bought into that already. So, yeah.
Yeah. All right. Well, thanks for bringing that one again, Tim. Tim always brings the goods, and we will see you all next time. Catch you later.